Well, hello, little pre-stream test here to see if the audio is coming through okay on the various streams going on now. I believe that I'm also streaming not only on YouTube as normal, Discord, we've got a Parsec share going, we've got x.com going as well. They just introduced a way to stream from desktop, and I believe that's working now. You'll have to tweet at me and let me know. I don't know how to view chat without actually jumping into the stream myself. But it doesn't seem as though I can at the moment, because that will cause some audio feedback issues, as well as I don't have the best internet connection right now where I am. So you'll have to forgive me for that. So if you are in one of the various chats, please go ahead and let me know if you can hear me okay, and if the audio levels sound good. And then we're going to get started here in a little less than a minute. Okay, it seems as though audio does sound okay. We're going to go ahead and start getting rid of the music here, and we're going to get rolling into the stream. Forgive me for the abrupt nature in which I'm stopping the music. I'm a little behind today on where I wanted to be, but let's go ahead and get this rolling now. And, oh gosh. Too many things, too many streams going on. Okay, you guys are catching up. You can hear me? Okay, great. All right, we're going to get rolling here as I kick the crap out of my desk again. Hello and welcome to Macro Mondays here on Landy's Crypto Corner. I'm your host, Landy, and this is our Monday live stream where we take a look at the longer term time frames for Bitcoin and traditional markets, gold and Dixie typically, and weave that into our daily and lower term time frame analysis. Now, today is going to be a little bit different in that we are going to focus primarily on Bitcoin because it is painting a little bit of a different picture than traditional markets at the moment, but we will touch on traditional market stuff. We're going to spend a little bit of time on Bitcoin today because we did have the monthly and quarterly closure come in, and I was unable to stream last week. I was under the weather. I am still a little under the weather, so apologies for my voice if it begins to crack and or I have a little bit of a coughing fit. I do apologize ahead of time. We're going to start off by taking a look at Bitcoin here on the daily chart. This is the chart that I typically show in my Bitcoin in 60 seconds videos. And for those of you, I'm seeing new people come in. Hey, how you doing? If you are new here, go ahead and like, subscribe, follow if you're on Twitter, and you can actually see that. I can't see chat if you're on Twitter, so I did say this before I just started the stream, but if you are on Twitter and following along with the live stream, or watching the live stream rather, go ahead and hit follow. I will try to do this on a regular basis, typically Monday, Wednesdays, and Fridays. We have a little bit of a theme for each one, for each stream. Mondays typically is the macro picture. We are going to start off by looking at the Bitcoin in 60 seconds chart. That is the shorts videos that I do on YouTube, where I give out basically I condense all of the analysis that I've been doing throughout the day, and I condense that down into the primary targets that I'm looking for to the upside and downside. If it's an upside move, usually giving invalidations for continuation to the upside. If it's a downside move, invalidations for continuation to the downside. But I'll give you both sides of the equation in terms of targets and what I'm looking for in 60 seconds. Many of you are very familiar with that and this chart, except not in this format. This is the full chart. it does extend quite far. So in this case, we have hit all of the primary targets that I was speaking about, at least in terms of the main targets. Prior in last week's Monday stream, where was that? That was where was Bitcoin? We were right around here. Yes. It was looking as though Bitcoin could still head down a little bit further and tap on this weekly down here at $26,000. Let's go ahead and change this to white. And yes, this will do fine for now. We were looking at the possibility of hitting $26,000. It actually did. I believe it hit just under $26,000 at $25,983 here on Coinbase Spot. And that this area needed to hold up basically. And if Bitcoin could put in a low and get back above this weekly at 26,750, it was very likely going to go back and test this monthly here at 27.2 to the dailies at 27.5, which were just ran over here. And above there, we had our targets of the close open at 27.7 to the weekly above here at 28K. And now in yesterday's video, the Bitcoin in 60 seconds video, I noted that Bitcoin was right here at the weekly at $28,000. And if we did see it trade above 28,200, I was looking for 28,426. Now this daily right here is 28.4 marked, but we did now get that 28.6 run as well. The bulls do need to get above there to go test this low over here at $29,000. That would then open up this next area over here at 29.4 to 5. Now this was a wick breakdown from the highs there, kind of setting in that that swing up there that did tap on the daily, weekly, and monthly overhead resistance at 31.8. That was something that we had been looking for a very long time. A lot of people were bullish for a little bit higher. I said that if this doesn't break, we're not going to see even lower term time frames head up. And this zone is 31.8 to 32.4. Now, this weekly is the next big area that Bitcoin does need to overcome, or the bulls need to overcome and reclaim in order to go retest that 31.8 high up there. And that is going to be the weekly at 30,300. So, everything right now underneath that weekly is still, reminiscent of reaccumulation price action if the lows do not break. And worst case for bulls is that it's bearish price action that sends price lower. Now I can't fade a move like this. This is a nice move. Yes, decent rejection up here. I saw that some of you went short in Discord when this move went up to around that target at 28.6. When I give out these targets, they're daily levels. So we need to see a close above 28.6 in order for us to go, and test further up. If it's just a wick, it's likely, we need to see follow through. It's likely going to get sold down at least at first pass. And that is what we are seeing here in the early goings for, this daily candle. I did get a short there around that area. Just with a scalp back down to right around where Bitcoin did head, and that is the upper second standard deviation of the Bollinger Bands here. And as long as Bitcoin is closing above this upper second standard deviation, which is coming in at 27,730 or so, I believe it dove a little bit deeper than that in today's price action. It did get down to 27,650, so about $100 under there, a little less. As long as Bitcoin is closing above there, though, it is more likely that the volatile momentum of the move keeps it on the highs for a little bit longer, somewhere around this weekly and daily zone around 28,000 to 28,426. Now, if it does pull back and lose that upper second, just be aware of, on the way back down where this high was put in at this prior daily support resistance level at 27.5. This is a historical level from over here. So just look left on your chart and you can find the highs and lows for a lot of these yourself as well. And I will share this on Twitter. I'll share out the support resistance zone layout for you guys as well. But the big areas to be looking for is basically that daily 27.5 to this monthly at where the upper first standard deviation of the Bollinger Bands currently is, and that's 27.2. Below there, I would be looking for a run right back to this basis band by this weekly at 26,750. That really does need to hold for the bulls in order to maintain the integrity of the expansion of this move up. So this expansion of the move up is very different than it coming down, and it could come down further, even swing this low down here, which is currently coming in at just under $26,000. But the expansive nature of the move, or the in some cases impulsive nature of the move, would not hold up on any closures below that basis. We would just be giving up this nice move up, and we would see that expansion blunted. We would then get some residual expansion of the upper standard deviations of the Bollinger Bands into this weekly and daily overhead resistance, but then they start to curl over and become primary resistances. In addition to the horizontal support resistance areas, it would also become primary overhead resistances in terms of volatility of the Bollinger Bands. So in this case, trending outside of it would be very good. That's what bulls want to see. But realistically now, get above that 28.6 level, reclaim these wick lows over here, go test 29K. And if they can recover that range above and then subsequently take out 30,300, I think party's on to the upside. If Bitcoin does fail on any kind of a move back down towards this weekly at 26,750, I would be looking to the lower first, which is coming in at, we'll call it 26.5. It's around 26,440. I suspect it's going to move up quite aggressively at close today. So we'll come back to this in the Bitcoin in 60 seconds video. But I'd be looking somewhere around there, and this low around this weekly at 26K. So lose 26,750, probably retracing this entire move back to the higher low here. But at least there's good structure being built on the daily here with Bitcoin. And of course, if it did fail that 26K, I'd be looking down to the lower second, somewhere around 25.8 for now. That is going to update to around $26,000 by end of day today, I suspect. We'll come back and check on it again later with the Bitcoin in 60 seconds video after close. Below there, I'd be looking for a run of the wick lows around 25.5 to that daily support area that held up perfectly at 25.1 to 24.8. For those that took that move, bravo. It was probably a pretty scary move to take, but one that held up nonetheless, and I had quite a bit of confidence, at least on first pass of that move and move into this prior low over here, major low on the weekly, that we would at least see a nice reaction out of it, and we did. So took a little while. One of the big things that I do want you to note is, we have volatility expansion. Now, this is confirmed volatility expansion. Could it be blunted? Yes. Where does this get blunted? Closures back below the 26,750 weekly. That's where the upper first standard deviation is. That's where you'd start to see volatility, which is the multicolored line here, come back down, especially in towards the basis band there at around 26,500. And then, curl all the way over on any retracement, of course, back down below there to the prior low. But for right now, this move is cooking. It wasn't, the lowest volatility we've ever seen on the daily, but, it is fairly low volatility. So if it does start, creeping up past the 50% here, I do suspect that we are going to see this move continue to test around its current area, possibly even breaking through to some of those deeper upside targets. But that the area where that kind of falls apart for volatility is very clear. Back below, closures back below on the daily, this weekly here. The upper first, is 27,200. That's the monthly. So closures back below the monthly is when we would start to see volatility curl over. And then it's kind of volatility, mean reversion, basically back to the basis here on any tap and or break of that weekly at 26,750. So, all right. That's going to kind of do it for that daily. Let's go ahead and take a look at the higher term time frame closes here. So we're going to take a look at some higher term time frame closures. We had the monthly and the quarterly come in, and this is going to be probably the part of the analysis that if whether you're bullish or bearish, you really do want to pay attention to, whether you agree or disagree with the assessment. When it comes to volatility, this particular picture that's being painted needs to be well understood. whether you are a bull or a bear, because it's going to be advantageous to know where these areas are on either side of the equation. Now, this is a bullish reclaim of the basis band. And I had mentioned this at the open of last month, and that, Bitcoin had, came up, swung the basis band, and then came back down and closed below it. If we do see a reclaim of it, and it's likely to move down because the basis band is still in a downward facing angle here. It has not flattened yet, so it is still in a bearish posture. But the only way to turn it back up is to start getting, swings of it and then closes above it. And when you close above or below the basis band of the Bollinger Bands, which is a 20 simple, and then the standard deviations are, a first standard, second standard, third standard to the upside, and same to the downside here. But in this case, the bias is above the basis that you target that upper first. Above there, you target the upper second. Below the basis, and this is all in the context of support and resistance areas, right? So upper first is right now around $33,000. There is some wicks around this area, from January of 22. And there's some other, lower term time frame closures in and around that area. But in this case, general bias would be around $33,000 to the upside, to possibly to the upper second standard deviation, which is coming in around $39,000 currently. Of course, Bitcoin would have to recover this $35,000 area. It's got to reclaim this breakdown candle at 31.8. But then then we're looking to 35,000. We've got the breakdown up here at 37,590 or 37, 600 or so. There is then a little bit of a low structure here around 38,500. So it's very close to that 38,500 low. And that would be, a very substantial upside move on the subsequent monthlies here. But, I do think that, excuse me, that it would be, not out of the realm of possibility, especially if we see a breakout above 31.8. Now, generally speaking, below the basis, we were bearish until reclaimed, and it was just kind of oscillating around that basis anyway in the prior month. But, the main downside area to watch was $23,000. And in between $23,000 and the basis, if it could reaccumulate, we were looking for this to pop back up, and it did. Now, the monthly momentum is typically I show you a momentum indicator that there's a couple free ones now, and then there's one that I use primarily, and it's called the Advanced Stochastic by KVDB over there at app.crowntrading.net. I don't have any affiliation. I don't make any money by mentioning them or using their stuff. I'm not an affiliate of theirs, but I am a big fan of their developers. But I've also mentioned that there are free, Stoch pivot applications or indicators. And there is the BA reverse Stoch panel. That's this one right here. And in the settings, and I showed this briefly a couple times on the shorts videos. You may have caught it when I mentioned the Stoch settings, but there is a overbought and oversold area as well on there. So that's your 20 read and your 80 read for Stoch. And this is a regular Stoch for those that are not familiar. This is not a Stoch RSI. Stoch RSI is the velocity of RSI, or measuring the speed of RSI in its upward and downward momentum. This is close over close momentum. So regular Stoch measures close over close price action and maps that out. In this case, this is running a 6.3 KD 14 period 14 period length and 255 look back. So, and so the K, it's a 6.3 14 255. If you ever want to look at the settings and try to replicate them in a different indicator, or you can just go pick this one up. It's the BA reverse Stoch panel. It's free. You could search it in the indicators, but you could turn on the overbought and oversold zones, and then it has the pivot here. In this case, The pivot did move down. So it was somewhere around $22,000, and I was expecting it to possibly move up to 23. It moved down to 21,800. So the monthly Stoke a little bit further away than it was. That's actually something that's pretty good. And I do want to note, we're going to go up a time frame here. Where we are in terms of the 2 month, as well as this is going to be closing this month, as we've got, the staggered closes, just the way that math works, the months work on the calendar. But in this case, Bitcoin had rejected that basis band, came back down. If it can set a low in the 2 month, the basis band is right here at $32,000. So, yeah, if Bitcoin can get above there, especially by the end of the month, we are definitely looking for a much further move to the upside in terms of, and probably much more volatile. We'll take a look at the timeframes below the monthly here, but if it can recover above there, I think it's that would suggest somewhere around the upper first over time, maybe by the end of the year, maybe before it, who knows, of around $46,000. Now, of course, that would be, pushing the upper end on the monthly there at the upper second. And if we did start to see closures above the upper second standard deviation of the Bollinger Bands, that's when we have our big bull runs kick off. We saw the first closure back in October of 2020, kicked off the big bull run to the upside. I can go through this all again. If you'd like, we'll just do a dedicated video for it or something, but closing above, whenever Bitcoin closes above the upper second standard deviation of the monthly and starts to get expansion to the upside, that's a close above, not a wick into, not a wick above, but a close above. That's when the bull runs really get rolling. And that would start on the monthly at about, 40K, as it stands right now. In the 2 month would be around that 45,000. So, get closures up near that upper first, and that would be closures in the monthly above that upper second. Then I do think we're well into bull run territory. The quarterly now is going to be the big one. We might as well check on the 2 month pivot, as we will revisit this later this month, but it's $23,000. That's where I've made mention over here on the Bitcoin in 60 seconds chart that if Bitcoin were to choose any kind of a downside route and break down below this monthly close open at 23.3, that's where things are in danger of running that major low, and maybe violating it, or maybe doing what we did in 2020 and picking up off those lows, solidifying the major low as a macro low. In this case, we could see that it is outside of the oversold zone. A trip back in there would be 18.5. And now that we actually have that on here, just to give you an idea, Bitcoin on the monthly getting back down to oversold would be, negative numbers. So I highly doubt that's going to happen. I'm going to see if I can tinker with some of the code of this and get a scale midline, like the 50 read or not. And then we'll come back to it. But overbought would be 36,000. So that would be, reclaim of that 35,000 monthly lows. And then we see over here all the way up at the overbought, swinging up all the way on the 2 month. We could see overbought is, that's at $211,000. That's not exactly a target I'm necessarily looking for right now, but, maybe in the future someday. But I did want to point something out here. When we've seen the Stoke cross on the 2 month, which it is crossed currently, we can go to the index, and maybe that'll make things a little bit clearer. When we look at the cross up on the 2 month here, we can see that, we've had one back here. We had another one right at the highs. After the highs were put in 2019. And then, of course, we have a cross. We had a cross on the bear candle back here. So you can see that it's not exactly the best timer of, the upside momentum kicking off, but it typically does tell you that the macro low is typically in when you see that the 2-month regular Stochh has crossed to the upside. And in this case, there was a run back down to the lower first back here in 2020. And in 2019 or 2016 rather to 2017 rather, 2016 did just see things kind of go sideways after that and then just straight up. Now, in this case, where is the lower first? Well, this would look like a macro low retest or a major low retest. Thus, if it holds up, it solidifies it as a macro low in this case. And just so you know, my thought process behind that is this is not a macro low until it's either retested on a higher low, so we see a higher low put in, or we take out the highs directly. And unless Bitcoin, does this, puts in a low right here, that would also solidify this as a bit of a macro low. Or it just goes right up. It takes out the $69,000 highs. This low back here is still considered, in my book, a major low, not yet a macro low, but it's working on getting there. And this is kind of the case that I'm making right now. Now, when looking at the quarterly, we can see that the quarterly momentum is about to shift as well. So we'll get rid of these verticals here for a moment, and we could take a look at the quarterly. The quarterly is currently pivoted at 24,300 rather. And funny enough, 24,300 is actually a major weekly level down here. And we'll take a look at this when we look at the weekly in a moment. But 24,278 is a major weekly level. So if Bitcoin were to fall apart and swing this prior low at 24,800, 24,750 and lose it, that's the big area down below. It needs to bounce from it and hold that area. And that is the quarterly momentum pivot. So this is going to be the pivot to watch through the end of the year. If Bitcoin can remain above it, we are likely going to see a fully confirmed cross to the upside. And once the cross is fully confirmed, price can run all the way back to those lows. Highly doubt that it would be an anomaly if those lows broke. And this is looking more like if Bitcoin can turn, obviously, the monthly and put in a higher low in the monthly. If Bitcoin can then turn that quarterly, get above, the basis, or just hold the lows, the current lows. It's very likely that 15.5 was the bottom, and the bear market lows, macro lows, are going to be thus confirmed shortly thereafter, if not before. We don't necessarily know. We can't tell the future, but we can get a good idea of what that future looks like. Overbought, by the way, is a lot more aggressive on that 2-month than it is on the quarterly here, given about $196,000. Oversold is where you're seeing $14,000. By the way, I would be very surprised, to be quite honest, if we did see this head back toward. Oh no, I'm sorry. This is negative 14,000. So we're not going to see that down there, as that is impossible. So. All right, let's go ahead and take a look at the 4-week. Let's see what kind of closures we got. The 4-week coming up this week end, and that pivot's going to be 22,350. So not even within range yet for the 4-week. 3-week is, it's still above price action right now at 29,632, and that is I guess crossing down. That's a bit of an interesting way to put that. I guess if it can recover, it is latent because it's a 3-week. So being above that basis is just fine though in the 3-week. And the slope of the basis is actually pretty encouraging for bulls here. If it can reclaim the upper first at 28,900, that would actually look pretty good. Let's go back to the 4-week real quick. 4-week is still downward facing. So this is where we have seen Bitcoin kind of base off the basis band in this case. And if it does break above that upper first at 30,000, and in fact, this is also the weekly area at 30,300 or so, I would be targeting that upper second, and that's at $35,000. So we're getting some confluence there on the 4-week. 3-week is saying 33. almost $34,000 at the upper second. Obviously, if we did start to see closures above the upper first, this is going to start pushing that 35,000. But this is coming in right around a low on the 3-week. A little bit of a different time frame, but good to keep an eye on in conjunction with these other medium-term time frames below the monthly, or between the monthly and weekly. The 2-week is also going to close with this weekly. So we've got a weekly, 2-week, and 4-week closing all at the same time. 2-week basis band held up on a close. This was actually something that we were watching, and I did call out the prior 2-week open, and beautiful recovery for the bulls there. This is another one that is upward facing basis band recovery above that upper first, which is 29,200. That's right around the daily lows of the prior range above. I would be favoring, again, a run right back to the upper second then, and that's currently coming in at the highs. It's slightly above, but it's in that zone around $32,000. The momentum pivot is still down, though, on any closes below 30,611. But in this case, if Bitcoin is going to rise up and start closing, if it does start closing above that upper first, again, that's 29,250, 29,200 or so, then what we'll see is a bit of a bullish momentum reset there on the Stochh. And then, of course, we've got the weekly, which is coming off that lower second standard deviation area. And this is going to be a bit of an odd one because of the way we got the close open there. So we're going to go back to spot price action here. And if we look here, the close did reclaim the basis. Now the basis then moved up, and that basis band is right now at 27,967. So $28,000 closed right on it. That was one of the main targets that we were looking for to the upside. On any breakout above 27.5, that last wick high here. And we've got any kind of close above here on the weekly, and then we're favoring a move to the upper first standard deviation around this is 29.7 to 800 area. So above the upper first, of course, we're right back to the highs. Upper second is still right there at that 31.5, just below the wick highs there at 31.8, going into that monthly area. So very, very good. Bulls need to defend that lower first, of course. That's at 26,232, which it's kind of oscillated. We were talking about this back here. Here we are talking about again 26.2, and we're going to see this when we look at the lower term time frames. We're going to see that this is when we break down the move up. So in prior streams, we've broken down the move down in the lower term time frames using volume analysis to create swing fail and continuation zones. So, close below high volume candle, it's going to keep going down. So we did the whole move down, and we're going to subsequently, now that the move has shifted and we have a nice move up, we are going to create a new volume-based chart for continuation and swing fail areas. But we're going to see that 26.2 is going to come up on that chart. So I did want to call it out. Being at the basis here, low volatility, really low volatility on the weekly. But more importantly for the bulls here, you need to see follow through, bulls. Bulls need to see follow through above 26,133, and we'll have a completed or fully mature signal at or on the weekly here. So I will tell you that is a that would not only confirm the fact that structurally we can see that there is a low here now, and it still hasn't called it out on some RSI indicators, but in this case, a close above 28.2 will do it. From the close over close momentum, the lows in, pretty major one too. After swinging this low over here, you're not going to see bullish divergence pop on a lot of indicators, but there is bullish divergence from the February low back here. And, it's a continuation drive in this case. But this week, this weekend for spot price, bulls need to see that that close above 26,133. And then realistically, I would be favoring a much further move up. And just so you know, last time we did see this on low volatility was back here in December of 2022. We had very low volatility. Let's go ahead and turn on just BBWP, as I did point it out on the Landy Bands indicator here. But let's go ahead and make things a real mess. But the last time it actually still had decent, man, this is some of the lowest volatility we've seen, huh? Oh, wow. I mean, the last time we had volatility in this area was on the move, the mean reversion back down in June. But the Stoke was not in the same place, right? This was a bullish, this was a momentum reset and then bearish divergence on the other side. But now we have a full-on Stoke reset, at least on confirmation above 26,133 by Sunday. But the actual lows are the last time that we did see, this get its turn up, and that was right here. So that was also coming off of the lower second standard deviation, one of my favorite plays, regain in the next week's candle, the upper first. We've already seen this play out, lower second, regain the upper first, and this is already working on the basis band. Different setup on the bands. If this was to get straight up upside expansion, this is going to be a very volatile move to the upside. And we can see that when looking at this, let's say it did get a very volatile move to the upside and enter the bullish, overbought zone up here of a regular Stoke. This is telling you that that's around $48,000. And that's the big breakdown high. That was the lower high that got everybody super uber bearish for at least 30,000 and 30 to 35,000 at the time. But that is that's this high right here. That would be a test of this high. And of course, if we started to see the weekly up there, we're going to see the monthly and 2-month, right? We'll see the quarterly turn. It's almost certainly bull run on at that point. Nothing's 100%, but at the very minimum, major low is a macro low at that point. We're likely seeing the bull run kick off into full speed, and looking for the highs, the all-time high and higher. So, could this be a fake out though? Well, if Bitcoin were to even tap on the oversold zone here, which it did already, but let's say it double tapped on it. I want to call this out. $23,000 is that pivot. So $23,000 again is a major monthly level. So this is we have it marked on the Bitcoin in 60 seconds chart, but this is a close open over here. We did see a candle close, a couple candle closes right on it. We saw 3 candle closes right on it, and we saw 2 opens. So this is an absolutely incredibly important area and the one to watch, and it's 23.3. So we've got the close opens here. If you're using swing indicators, you're going to see that this was a lower high and then a lower low, so just continuation of trend. If you're using a swing indicator, you'll also see that it put in a high and then swung it again to put in a low to a higher high here. I work off closures in this case when using these longer term time frames. So I take it as how many close opens do we have? So we have a close, we have an open, we've got a close, open, and then we had a close open and then a close open there for February, and then an open. So vital area just so happens to line up with a double tap for the weekly as well, if things were to fall apart on this particular rally. And let's say, Bitcoin rejected the basis, got back below that lower first on the weekly at 26,200. Started to push that lower second at 24,500, which is also a weekly area. right? So that 24.3 to 24.5 area that I'm always calling out to the downside is right there at the lower second. If it started to grind that down, that monthly is just below, and that would line up with a double tap of that over sold area. Doesn't mean that it couldn't fall through, right? Especially on expansion or closures below the lower second on the weekly, but weekly typically will act as reversal areas, and a lot more things do actually favor the bulls in terms of the Bollinger Band setup currently. We see the lower standard deviations curling back up, setting a bit of a range. If Bitcoin can recover above that basis, 28K, and start pushing that upper first, you're going to see this entire set of bands curl up, and you'll start seeing the expansion of the top side of the upper bands there. First, second, and third standard deviations start to move up. So this is going to be an interesting one to watch. But I think that while there is risk to the downside, closures on daily and higher term timeframes above $23,000, 23.3, can't be bearish. I really can't. I think that everything above there is an opportunity, and anything below there is also going to be an opportunity. As my personal feelings. Now, I gave you that, if we did see some major runs of those, a breakdown of 23.3, it's very likely that we go see this low area get tested, probably on the high side around the $17,000, $18,000 region. But I do feel as though this is probably going to become a macro low. It is not yet a macro low. So anyone telling you that this is the macro low, they are assuming that this is the macro low. Right now, it is only a technical major low. We need to see that higher low on the monthly time frames, and or a break of high structure, right? And then we can start calling it a macro low. Now, the weekly did, in my opinion, on a close, put in a major low. It's still got work to do. It's got to close above $28,000, $28,200 or so. All right. That's Bitcoin. Now, I did keep that. That was a little bit longer. If you have any questions about it, I'll try to get to them here in a little bit. But one of the big things is I see that there's people watching on X. I appreciate you showing up. I can't see chat there, so if you did want to chat, you can always hop over into the YouTube stream. If not, you can just message me on X or post a comment or something, or a reply underneath the stream if you have any questions, or if you have any suggestions or I missed something, go ahead and let me know. But in this case, the daily, momentum is going to remain up on closures above 26,640. Okay, this is going to aggressively rise in terms of the momentum pivot. So keep that in mind. At close today, this is probably going to be around 27 at 27.2. That monthly that we talked about earlier, that Bitcoin has now reclaimed. If it does continue up, overbought zone, guess what? That's our target up there at that $29,000 that we talked about in the Bitcoin in 60 seconds video. And then, of course, at the beginning of the stream. Possibly, I do want to work on the math so that this is, I might customize this indicator a little bit and make it so that you can select areas of the chart, like what if it ran to this area at 83 and, above the overbought or below the oversold, and kind of get those pivots as well. But in this case, that's coming in right around a major area that we were talking about to the upside. That would also be a reclaim of that 28,600, which is what the bulls do need to reclaim in order to really get above, and really start making some headway into this area. And of course, the low wick there is at 28.4, but there is a lot of resistance around the deep half of $28,000. So you're 28,500 and above. There's a lot of wicks on overhead resistance. And recall that this was a major level right here. This rejective wick high at around that 28.4 was also the major wick low And then once that was broken down, once that broke down, and even in lower term timeframes, that was the flush down to where Bitcoin has been trying to reaccumulate and set a major low. So, all right, let's go ahead and break down the move up. I can go over some medium term timeframe stuff, but for man, I'm sorry about the cough. Man, I went from being sick to being better to being sick again. Man, it just sucks. All right, so the move up from the lows, the volume-based analysis that we've been doing was pretty straightforward. We had gotten this move down. We charted the move up and then the move back down, and using some volume analysis. So this was basically all of this. We're now gonna take a look at the volume-based move up. So because on any mean reversion, it will act as support. And then also we break through some of those high volume candles, we get continuation, right? So we'll break down the swing fail and then the continuation to the top side here. What a breakout, man. Crazy. All right, so off of the low here, we had the run from 24,900 or so up to that 27.5. We had already charted that move down from 27.5 to this most recent low side structure at around just under $26,000. So that was the previous volume-based move down that we had charted. And it worked perfectly, by the way, if you were keeping track of it. But what we're doing here is we're going to take something like a 15-minute. You can go, just make sure when you're doing this, you do it for the time frame that you are on. And because it's going to be relevant in terms of that time frame. So the high volume areas that set the lows, basically. So that's going to be this area here. This candle right here was the low, and we're going to do the same kind of thing. Wicks are going to be white. Closures will be yellow. So big high volume. We're discounting this area right here. Yes, this did hold price down. Did get deviated between the close and the wick. We're going from the move up, right? So we're looking at the high volume continuation candles from the move up in its entirety. So the supports. So not the structure that built on the way down, but the mean reversion structure that then led to the breakout. So in this case, we had a bunch of areas of interest over here. We had the wick low swung here, and then we had the close of this candle. We had the wick low of this guy here, right? And we had the close of this candle up here. So there is some of these will be the same as what you may have already marked. So that was this candle here. So close, close. And then we saw, we did see some swings up and some, once this created the swing fail low, we saw it held as support, right? The next big areas to be aware of were the moves up. So the highest spikes in volume that were creating some of these highs on the way up was around this high here, which, funny enough, I believe was one of the early breakout candles here. So if we go here, that was this doji. Nope, that was this. Closed right on this guy, so we don't need that. We need this as a wick. You can see that breaking above that higher volume candle. We got the low. Did I get the right candle? I did. Yeah, it doesn't look like it's the right candle, but it is. It's this guy here, and that's going to keep popping up teal, isn't it? But after breaking above it, you see that we held this area as support. We got continuation in the candles, right? Continued bearish reclaim, swung it again, and then headed back down. But because all of this price action that is a bit of higher volume in here after this breakout, is within the structure of these other higher volume candles, we don't mark them. Now, on the way up, we did see another big breakout, and that didn't really start to occur until the highs here. So we had the big volume-based candles here. We had the biggest one coming in right around here. And you got your close open there. And you can mark the highs if you want, right? But we see that, what was going to be the continuation was going to be, okay, next candle above this wick high, we got continuation. And then we saw that it came back down for support and then pushed up. And then once it lost it, that's our swing fail top right there. So that's mainly what you can mark the highs for continuation above that high if you'd like. But remember, we were operating off a chart that already had all of the overhead resistance, and that was already an area of overhead resistance. We're charting the move up for mean reversion plays as support now, not resistance. So you are going to see that these are going to look a lot more like swing fails. And that was a swing fail, comes back down into a big area of support. We see that once it reclaims this area, stop short, reclaim that area. It got continuation above these wicks here. It did reject initially, but pretty quickly went on to put in some more higher volume candles above that put in a high. So there's your breakout. Candle, close. And the wick. All right. And then we've got the high up here that was starting to be built. There's the wick. There's the close. Again, yellows are closes and the white candles are wicks. And because we did get another higher volume candle, when you do see like a swing like this, once this swing high is put in, we got continuation in the next candle. It was also itself a nice high volume candle. Came back down, found support, and then found it as resistance. You can mark it. Man, I'm just not going to be doing well with the coughing today. It was doing well in the beginning, but not now. Excuse me while I take a drink and get reset here. All right, so got the close, got the wick high. Yes, does it look like a mess? Yes, it does. But this marks all your volume. You don't necessarily trade this chart unless it's getting to some of these important areas. So you can then, it gives you options to define what areas you want to alert for, trading view alerts and stuff like that. In this case, we saw another high volume candle, but it came right into this close and rejected, right? Then it lost this close. We know it's a close because it's yellow. That's from this guy over here, which is also a high volume candle. We saw this nice low come in, this higher volume low come in. We don't need to mark that. It's not an upside move. So we're not looking for continuation or swing fail. This came back and found this candle close open over here as support, right? So now you can see how this is working from the move up. Now we're tracking continuation and then the swing fail. And now we can see where support's coming in. It's pretty easy, pretty clear to see then on the subsequent candles, like where's the high volume probably going to come in? Well, if I have this area, if I have these areas marked, I'm looking for high volume to come in around here, or up here, up here, up here, right? And of course, as expected, we saw high volume after this area to the left was marked. We saw high volume at the highs. We saw high volume come in where these high volumes had marked the breakout areas on the lows. All right. And then it was kind of dull until we had blast off, right? So realistically, you had to be pretty low time frame to catch this. I personally was trading off the support here around a little bit under $27,000 for the scalp position that just absolutely blew up. I realistically was only scalping back to the top side, but I was ready for a volatile move. I had made mention of this in the Discord for those of you in our friend group. Yes, there is a Discord coming soon. No, it is not ready. We're having some issues with the ability for malware to still be uploaded. So that's going to be restricted pretty soon. And hopefully Discord will actually do something about that as well, because I want people to be able to share charts and, GIFs and stuff like that. And right now there's some funky stuff. I won't get into it, but I'm not going to open it until we have a way to make sure that people who are joining it have some measure. We have some measure of protection in place. All right. So the next highest volume candle was a breakout candle. So what do? We mark it. If it would actually track. So that is going to be, we can just mark the wick. And then we'll mark the close. And the close is going to be yellow. And we can see that, there's already overhead resistance that we're aware of, right? We already know about the 28,000. We know about the wick at 28,200. We know about 28.4 and 28.6, right? We talked about it in the Bitcoin in 60 seconds video. So this is not like the main chart, but this is great for looking for continuation, right? So we see this high volume candle get put in, comes down, starts to lose it, closes back inside, starts to break above it, comes back down, higher lows, and then continuation. And to be quite honest, we haven't seen really high volume just yet. But what this does tell me, though, is breaking down below this close, right? And remaining below it. So we see it broke down, the breakdown candle, tested it as resistance, deviated above it, now still testing it as resistance. If we can regain it, and that's at 27,871, then I'm looking for 28,062 bucks right here, right? But as long as it's below it, we did see some significant volume. If you want to take temporary swings in between, right, the main downside target area would actually be around 27,300 to 27,200, which is the monthly, right? But we did see, relative to this big candle over here, we haven't seen too much in terms of higher volume. Now you could take, this was the higher volume bear candle on the high here. You can mark that, but because it's not a major continuation area that led to a swing fail, what I do is I mark it with just simply a trend line, and I usually keep those ones in teal. So this close open here, I will mark. You can mark the wick, you can mark the close open itself, and in this case, I might just mark the wick because the wick is going to be, break in, close above it, then we're getting continuation, right? That's just how price action works. But then this was the higher volume candle on the low. Man, I'm suffering through this one. I'm sorry, guys. Sorry about the coughing. Hopefully the information is good enough for you to stick around. But because this is in between a swing fail level, if we do see closures below this this area at 27,670, we're looking for this wick low to get tested at 27,644 and lower, right? That's where we're, we're on alert because this was a higher volume low. This candle right here defined the swing fail to the downside. So if it is violated and then the wick low here is dropped, we're looking at this heading back down towards that 27,300 area. And, or we're looking for a significant volume in between, but that's like your primary downside supports there. So the move, on the way up, pretty easy to track. Now, what I will say is when you're looking at this with the prior, chart that we had not changed since the move down, by the way. What we will do is we'll turn off a few of the other things here. So we don't need the fib retracement. This was the move that we tracked from the way down, just to kind of show you how this plays. The primary, is this the entire move from the way down? No, that's not. Interesting. Maybe I did not keep the full move. I could have swore I did. I could have swore I did. Oh, well. Yeah, I guess not. Well, I apologize. I don't have the move anymore. I thought I had saved the entire move. But I just had remnants of that particular move. But, once it broke out above this breakdown over here, which we mapped out, that's when we switched to charting this way. Because it got above all the overhead resistances. So, and it worked its way through mean reversion to re-expansion back to the upside. And that's now on the way back down. This is what we track. And this is going to be the primary supports on the way back down for this particular move up. Now, you can take higher term time frame closures. You can then also weave that into this. But I think that, I hope that it was incredibly clear how, this area over here defined this range in terms of volume, and then the move up, we're defining this range in terms of volume. And then we have some local stuff. I just marked that in teal, but the primary downside areas and the areas to beat now to the upside are pretty well and clear. So, if it can stay in this range here, put in a low here, you're welcome to mark it. It's an in-between level. I just kind of keep them so that I understand that this is all from the primary move up, that this is not part of that primary move up. This is moves back into these areas to retest as support. I usually just mark it in a different color. Especially if it puts in like a really high volume, which, this is decent volume, but a higher volume low within that support structure. I typically want to see it on the actual supports, and so on and so forth. But, if we break down from these areas and we're looking for continuation to the other areas, so reclaim of, 27,871 again, and I would favor a move back to, 28K and above. And that's going to basically do it for the breakdown of the move up. Give me just a moment, and let me reset here, get a drink, and we'll take a moment with some music. Man, I'm sorry. I tried to stay away from streaming for a couple days. I just couldn't do it. There's too many big closures. But we will take a look at traditional markets here, as traditional markets are doing something a bit different. So I do think it's important to, oh man, my intermission screen is not the one that I want to use. That is old. All right, so we're just going to fill with a little bit of music here. Apologies again. But I need to get a drink very badly here. And I will read chat as well and check on the various streams that are going on here. Okay, so you guys over there, okay, you guys are doing post-market stuff right now? Okay. Did they finish their testing? All right, so I've got some guys that are training for FINRA exams, and they're currently working in industry, and I'm helping them with their exams. And so for you guys in YouTube, that's who I'm talking to over there. You can't see them chatting, but I'm just basically saying bye. They're going to do their post-market stuff, so kind of set the table for tomorrow kind of thing. File reports. A lot of it's filing reports. All right, let's look. Man, I wish I could see I see people watching on X, but I cannot. This is I have like a dashboard, but I can't see the chat, so that sucks. Let me go over into YouTube. Hello Jedi, hello Bobby, no name. I don't. Shrubham gonna work for me as a thumbnail designer and video editor. I'm not currently looking for one, but you can always send me over your references and stuff. I might need one at some point at a later date. So you're welcome to send over references. You can contact me right through YouTube. and send me an email. Let's see. Sam, hello. Baba's going to be joining. Hi, Baba. Yeah, I'm behind. Can you tell us about the Bitcoin moon statistics being full moon? I don't do astrology. I don't. It's more than likely going to be confluent with whatever you're already seeing. If it's a counter signal, then don't even bother with it. I know that there's a lot of people that do the whole moon cycle thing, and Silico's got his own. He's got his moon indicator, and you can go through that. It's just not my thing, man. I have no statistics or data or anything that I can offer you in that sense. I don't trade moons. I don't trade stars. I trade charts. And yeah, I wish I could help you there, but I can't. I think that it would muddy your picture anyway. You don't want to set bias with something like that. You want the chart to tell you, based on support and resistance, breaking or holding. All right. What's going on with Dixie? Yeah, we're going to get to it. Hi, Baba. I think I already said hi. Hi, Don. How you doing, buddy? It's good to see you. Cheryl says, had a great day trading Sol. Okay, excellent. Let me mute for a minute and take another sip of my drink here, and then we're going to roll into traditional markets, and we'll take a look at Dixie and gold as well. Just need to give my voice a little break here. All right, I'm back. Sorry. Right. Cool. So we're going to take a look at traditional markets now. We'll take a look at Dixie and gold as well. And for that, I've apparently hit the DPI setting on my mouse. I didn't realize I did that, but okay. All right, let's go ahead and take a look at Dow to start with here. I'll be honest with you. I think Dow is in the process of setting a low. Is it in yet? No. Still getting expansion to the downside on Bollinger Bands, and but it did test into all the areas that we talked about to the downside. So on expansion, I mentioned that if it dropped this low, we're looking somewhere around these highs. It did hit those highs. And then, we're looking somewhere around the lows here. And so far, it has just about hit this gap here. And that's coming in at 33.2. It's really not... There's a lot of... there is a lot of support in here, right around here. So over here at around 33,250 or so, there is a major high there. There's also a low that lines up around 32,500, which is this low down here. And that's really, if this starts trading below 33,000, that's where I'd be looking. I would actually be looking significantly further down. So, and realistically, yeah, 32,500 on that low is kind of a similar area where we see confluent lows and highs. It's got to regain now the 33.6 area, and then kind of go from there. At this particular moment, it's just riding that lower second to the downside. I do think that it's probably setting up for a little bit of a bounce here. Stoke is turned up on closes above 33,450. It's currently below there. So I'm looking at this as continuation until further notice, especially when BBWP is still up. So it needs to regain the lower second to kind of blunt this move and try to set a low. And then I think then we reevaluate it, right? We take this open back here by the where it's basically an open right on the lower first standard deviation before riding the lower second back down. But close above the lower second rather, which it could do. 33,328. If it starts to close below, it's going to keep getting aggressive expansion to the downside. If it can close above it, still getting expansion to the downside, but at least give it a chance to head towards this 33,800 area. Realistically, it needs to take out this little bit of an order block right here at 33.5. Then we look to, 33,666. And then that 33.8. Above there, of course, would put it above the lower first standard deviation at 33,788 or 33.8. Above 33.8, I would favor a move back to around the basis, but realistically, it's got to regain the lows at 34. And once we see it, if we see it regain the lows at 34, then we can start looking up to, the gap there at 34.4, 34.5 area. For right now, it's ugly on the weekly, especially, but it's still in a supportive posture from the bands here. So don't get it twisted, man. Like, until this closes below the bands on the weekly, this is a consolidation range. Could it be consolidating to put in a massive rundown to the downside and everything nukes all at the same time? And sure, but for right now, it's just a consolidation look on the bands here, much like it was back here. Once things came up off the lows, hit that lower second and third, worked its way back to the upper first, found support on the lower first, upper first tap, move up to the upper second, right? Back down to the basis, find the upper first as resistance, and then worked its way down through the lower first and now towards that lower second. So lower second is at 33. We can see wicks into it, closes into it. Maybe if it's, as long as it's a close open that comes right back above that lower second, then I would be favoring this to remain a range. Otherwise, if we see a close below on the weekly of that 33,000, then I'd be favoring not just a move down to 32,500 as one of the main areas, but if we saw consistent closures below, then we're looking at the next low at around 32,000 at 31.8 and possibly that 31.4 to 500 area. So, it's not a good look breaking down from this structure over here, but it's just fine being above this kind of close here at 33. So above that lower second, I'm not concerned about market structure. And even below it, I wouldn't be overly concerned until we see something like 32 or 31.8 get taken out to the downside. That's when I would be concerned for this particular low over here. Otherwise, not that concerned about it. The second standard deviations typically act as reversal zones, so that would be consistent with that look. If it did tap on it and or just kind of hung around it and above it. So NASDAQ looks a little bit cleaner, a little bit nicer. Let's look at the daily here. Got our meme trend line. Oh god, it broke down, and look at everything fell apart. No, well, we mentioned this in the previous stream that breaking down below this low here, specifically losing the long-term support resistance area at 14,700. 14,700, we're going to go swing the low at 14.5 and possibly below it to this high side structure at 14.5 because there is confluence between that high side structure and this low over here. And then, the next big area to look for would be, this low and this high over here. So we got this high over here. So just under 14.5. Bounced right back to 14,700 and then again to 14,900, and now it's stuck in between the support and resistance area at 14,700 and 900, trading around 14,837. If it can get back above, it's already recovered, the lower first, I'd be favoring a move to the basis band around 15,000. About 15,000, we're looking at the breakdown at 15,152 to around. I would say 15,152 to the high side candles at 15,250 or so. You can take 15,300 above there. I'm looking for a run right back to the upper first, around 15,4 to 15,5 at the highs here. And then probably run to the other side of the bands at the upper second, to be quite honest. That would be your trend line retest. I don't really buy the trend line stuff, and I'll be honest, the trading trend lines has a super low hit rate. Horizontals is going to work much better for you, but they can provide confluence when paired with a horizontal support and resistance. So that is where trend lines do become valuable, in my opinion. Of course, everybody has their own opinion on that. The daily Stoke is pointed to the upside here. Closures above 14,561, which it is trading above. So coming into close today, looking okay. Well, I mean, it's already closed today, but you know what I mean. When this opens back up, it's likely to be going to be right around the low side structure here, around 14.6 or so, 650. This wick low from yesterday or Friday. The weekly is a little bit more encouraging for more of a bounce look anyway, coming off that lower first standard deviation back towards the basis at around 15,000. So about 15,000, I'm favoring a run back to the upper first. That's around 15,400. So I would realistically about 15,400. I'd be looking for a run to 15.5 on the daily at minimum. But the weekly does paint the picture that, as long as it can regain the basis at 15,000, then 15.5 is on the board. Momentum probably disagrees still, but that's okay. I don't really care what momentum says at this particular moment. If the bands were in a different position, I would. But in fact, momentum could turn back up at 15,470. It's actually 15,469. Nice. But closes on the weekly above 15,470 would turn the weekly back up. So be aware of that. October is kind of a thing. Does that mean it's going to remain true for every October? No, quite frankly, but so far so good for the first part of October here. Now, SPY, I don't know if SPY's giving us the same look, to be quite honest. SPY's setting up one of my favorite setups, though. So I do feel as though SPY's ready to bounce here. It may not be ready. I feel as though it's ready, but just what I just saw here. So expansion to the downside through the lower second and third. Even if it comes back down and sweeps this low by the lower second at around 420, which was our area, 420. It missed by 2 points, 422. I was looking for 420 just because it's funny. And there's an open right on it, or a close right on it. The open was higher, and that open and wick is what was tagged at 422.58. But either way, a run back down there, I'm actually looking at as a positive. Or if it just goes sideways and then starts to regain the lower first at around 430. Lower first is at 430. To this overhead resistance where we had this open right on that resistance, which was previously, kind of iffy support, to be honest, but it's right around there. But basically above 430, I'm looking for this to at least run the gap, this low to the gap at least, and that is going to be at 433 to about 438, 440, right there at the basis where it's currently at. So 433 to 440 is kind of what I would give it. Above there, of course, then I'm looking for a run to the upper first at 445 to 447, which, funny enough, there's another gap here. And then above there, I'm looking 450 to 451, and then a run of this overhead resistance again at like 452, 453. But what's making this one of my favorite setups is we have Stoke pointed up on any closes above 425.50, right? And the close did come in above there, but more importantly, we're seeing the etchings of mean reversion. Now, it's not confirmed yet. Closer above the lower first would start to confirm that, though. So, got to regain the lower first, and then go from there. So basically, regain 430, and I think the setup is ripe for a run right back into the range, and bear crisis averted. Quite honestly, I know there's a lot of people making a big deal about this, and I've told you over and over again here that this thing can come all the way back down to the lower second on the weekly, and it's fine, and that's at 420. That's kind of what I was looking for. So, and the lower first just so happens to be at 430 as well, 429.54 to be exact, if you don't want to round up. But realistically, closures this week on the daily, and then of course the weekly above 430 would start to paint the picture. This is going to head back to the 440 region, and that's the basis on the weekly. That's also right around the basis on the daily, and then above there the upper first at 448 to the overhead resistance at 453 or so. Maybe even run this high and the high above it at 455 to 460 by the upper second. This is bullish posture on the bands, so I can't argue with it until it's retested bearishly, and where it could retest the basis bearishly, retest the lower first bearishly. That's strong bear trend. The upper first is still bearish, but above there it's running the highs. You can't be bearish on running the highs until it swings and fails. If it swung and failed the upper second, then you can get bearish on it. But you're bearish within a range, not bearish for brand new all-time cycle low runs, which is silly until it starts to happen, right? And it's a pretty easy area of support to pick out just below this gap that was just tagged at 422. On the weekly, you could see all the support there at 417 to 420 by the lower second. If that didn't bounce things, then you start getting concerned. And I would, first pass bounce, if it fell apart and started to impulse through there, then there's a problem. But I highly doubt that's what we would be seeing. 450 would turn momentum back to the upside. 449, that's a little ways away. So NASDAQ's the only one that's looking a little bit better on the weekly there, where it could turn that pivot. But I'm not too concerned about it at this particular moment. I'd be watching for bounces early part of this week, see if they can hold up through the end of the week into the weekly close. Let's go ahead and take a look at Dixie. Dixie blasting off to space. All right, so we did get a little bit of a nice mean reversion right into our little golden zone, the golden pocket for Dixie there. Beautiful. So I made mention that on this high, it avoided bearish divergence, or would avoid bearish divergence. We saw the high come in. It avoided that bearish divergence on the daily. Came back down, fueled up right in the golden pocket zone at around 105 or so. 105.65 to 105.83. Got above the upper first, now pushing that upper second again. Expansion on BBWP looks good for testing up higher. This is gonna probably test significantly higher, around 108 or so if I had to bet. Looks good to keep rolling. Is it getting close? Yeah. Ignore these two lines up here. They don't mean anything on Dixie's chart. They show up. It's a bug in this indicator, but 106, 80 now is the pivot to turn this back down. It's just oscillating around in the over bought area, which is, fairly normal on strong moves like this to the upside that are getting continuation, especially like even on the 2-day. 106.72. 3-day, we're looking at 106.78. 4-day, 106.35, so still continuation. The 5-day was still strong, 106.36. Weekly, we're looking at 106.36. It should be the same on the 5-day and weekly here. So what does this tell us in terms of bands? Closing above the upper second. Well, we can actually get a pretty good gauge for this with keeping the band levels on here. Haven't used this one in a while, but I do want to bring this back because we're going to use the daily band levels as reference for the higher term time frame band levels. So I don't know why I turned it off. I guess because it was on the daily. Let's see. Let's go ahead to the 2-day. Okay, this is upper second area of the 2-day as well on expansion. Looks good. Nice tap on that upper first. Beautiful tap on the upper first, to be quite honest. It's a textbook for continuation. Textbook. Yeah, this looks good. Looks like it wants to continue. Closing above this high. Next target area is 10, 107, deep 107, 108 region. Now, granted, it's running 107.01 right now. So if it does start to turn around and head down before some of these closures, then we're probably looking at something different. Momentum's just going to keep chasing it on these higher term time frames. So, yep, 107.39, so 107.40 at the upper second here. That lines up with the upper third. That is kind of, 107.50 at the upper third for the daily. That is going to be fairly interesting to keep an eye on. 4-day, nice expansion to the upside, getting to some pretty critical levels, to be quite honest. I would not be surprised if we saw a pullback. This is pretty vertical. But, we need to see that bearish divergence build on the daily and or, create a different type of bearish divergence on the higher term time frames, because it's basically out of those zones at this point right now. Getting above these highs, this is a legit breakout with a back test. This is beautiful. Dixie's looking strong as hell. I still would be keeping an eye on 107.50 to 108 area. The upper second is 106.82. That's closing today on the 4-day. So we've got the 2-day, 4-day closing today. The 3-day just opened, so that's given us that 107.40 target area. And then we've got the 5-day and weekly should be the same. Maybe a little different look on the bands because of their staggered closes. But this is getting pretty critical around the upper second. Yeah, targeting all the same areas. 108, right? Yeah, 108, low 108 region. In this case, it's 107.99 on the wick. That's the next big target. It's also a close open on the 5-day over here. So there is a high. Might as well mark that one. Well, let's just make sure it's the same on the weekly. It is. So we'll mark this one as another big zone of interest up here. We do have confluence there. You could take the wicks above, but I mean, it's above the upper third standard deviation. I don't think it's necessarily going to be relevant for this week. I could be wrong. Nice Monday pump for Dixie, though. I'm not overly concerned with, but we do have to raise those targets, and it is, continuation to the upside. We can see kind of where things are headed with RSI as well. It's very likely that it's going to build more bearish divergence in this area. But this is Looking at if it gets to the critical zone, that's 108.40. And that's basically a 80 read up here on RSI. I think it's probably flirting in an area where it's getting pretty close to, where it if we were to take this last spike, it's got to get above this last spike to avoid bearish divergence now, and that's at 76.89. So it needs to close on a 77 or above, so we can actually get the pivot that it would need to close at to avoid bearish divergence again. And that is going to be 107.66. Yeah, so 107.66 is the number to beat to the upside to avoid bearish divergence in this off of this newer high on RSI. And I still need to see multiple drives now. Man, I'm really skidding into the end here with my voice. My apologies. Yeah, 108 is going to be the next target to the upside. Above there, 110, 112 area is completely fair game. I need to see some pullbacks though. I mean, if it just runs straight there, it's more than likely going to double top in the longer term around the current highs that it was at. So for everyone really excited about it and like it's gonna harm risk off assets, the harder this thing runs and the longer it runs to the highs without a break, the more likely it is to put in a pretty major top. What I will say is the monthly is the counterpoint to all of that, and it's like but it's still giving me the same look unless it closes above the upper second standard deviation at 111 on a monthly closure. Then and only then am I looking for legit expansion, but it could very easily run its highs up here at 114. Especially if it starts to close above 108, 108, 109 region from the monthly. When looking at things, and maybe it's 108.83, so basically 109. Man, I do not like being sick. All right, so yeah, and the other thing is the quarterly set a low. So this is the one that is a little bit more interesting to me, as it could just jettison to the upside, but the upper second is likely to govern it. You got upper second impulse through on compression, and then upper second as it's rising is typically an area, and that's at 110. So that being at 110 kind of tells me that, I think maybe, run to 108, 110, maybe even a swing of the local highs here. A nice wick up into this quarterly area and then head back down, because 112 is the pivot, 112.50 on the quarterly. So I do think that Dixie's probably going to slow down here. Man, I don't know if there's anybody still on X, but if you are, I apologize about the coughing. Yeah, passes Landy a little warm soup. Yeah, I wish. I got too much stuff to do. I've got a disabled child I got to take care of, so I don't have time to rest. There is no rest. So yeah, I mean, Dixie looks good for further upside from here, but it could very easily turn around in like the lower term time frames coming in close today, tomorrow. It's right up against the upper second standard deviation of the Bollinger Bands. On the 4 hour, for instance, 106.41 would turn it down. It's a close or two away from that, so maybe locally it pushes up a little bit more, but unless it just hangs on the freaking highs here. And starts closing above to get that expansion. We see it ran from one side of the bands to the other on the 4 hour. What it was so beautiful, right into support at the lower second standard deviation. Gotta love volatility and support and resistance plays like that. That was a nice bullish momentum reset too on Stoke. What a beautiful thing, right at the edge of the bearish control zone as well. Beautiful, man. Freaking, I love charts. I mean, you might not like Dixie because it's pumping right now, but it's a thing of beauty, man. And women. All right, gold. Let's go ahead and get into gold. Gold's looking like shit. Why? Because Dixie's taking off like a rocket ship. I had mentioned that, if it broke down, we could take it level by level, but this is now getting impulsive to the downside. And it broke down from that 1858 level. So the 1858 level on a breakdown was one of the main areas. Now that it has put a candle down there, and subsequently it's hunting for around, it's trading around 1827 already. So, I mean, it's hunting for 1800 and under right now. I wouldn't get in the way to this. I wouldn't knife catch this. Wait till it's ready to turn around. I was hoping for an upside resolution to this. And like I said, I wasn't concerned about it until this broke. And it still had room back to this low. But as I noted on the rejection of the upper second, that if it starts to close below this low and the lower second at around 1900, its eyes on this low, it's gonna head down. And that's exactly what we saw. Consolidation to boom down. And of course, Dixie just probably being the main driver behind this. And then targeting these lows down here at 1800. It's funny because China's appetite for gold right now is very high. So making it cheap for them is an interesting play. See, paper markets. I know it's it's risk. It's risk off, and well, this isn't. This would imply that the safe haven is the dollar, and we know that the safe haven is only the dollar for a shorter period of time. Gold was also being heavily hyped up at this rejection when we were talking about it. I went back and I looked at a bunch of news stories. It was being hyped up to like $3,000. So if I had been paying attention, I would have been like, well, this rejection probably means that we're going to take this low out and start getting expansion to the downside. But I believe that I had made mention that we're just taking it level by level. Once this high at 1850, once it dropped the lows here, you could take some structure here. There was, the 1875. It did bounce there on a candle, but then as soon as it started to fail, the next big area is 1858. And then below there, it's basically 1800. It'll bounce here and there in the lower term time frames. Now, the next big area, below here, below 1804, which, is a big inflection point here in terms of a SR flip. But below there, if it swung it, there's some high side structure with some lows over here at around 1775 to 1750, 1740 to 1775 or so. If you want to take the wicks, they're at 1785 and 1725 respectively. But realistically, I'd be looking for, on any break of like 1800, I'd be looking somewhere around 1750 to 1775 as a basing point, and then come back to it. It's pretty beat, but it's still got its feet for some further downside run in here. 1873 on the close, obviously well below there, as it is in a bit of an impulsive structure to the downside on the daily and weekly. Is it getting into some interesting areas? Absolutely. 1800, and honestly, between here, it depends on what kind of gold you're buying. If you're trading this, I say you wait. But if you're into buying, ounces and even on silver, I'm sure silver's probably dumping a little bit too. Silver was actually looking pretty good for a little while, and then it just, I think it just broke. Yeah, it just snapped. But like $20. I mean, silver is actually holding up better than gold here. Gold had some more room to run to the downside in terms of impulsive structure. So we are getting expansion to the downside. Main target is going to be 1800. The big weekly area below there. Obviously, we're looking at the lows at 1750. There's a little bit of a low here. There's a low over here. And then below there, we're looking at 1700 possibly. When it starts getting back to 1700, we got some freaking nice price gold. And brilliant trades to the downside to get there as well. But it's entering a pretty major area of support. Weekly is pivoted at 1900, so this is probably going to be, unless it gets a very aggressive bounce on the daily coming into the end of the week, I would say that it's probably going to be continuation for a little bit. I mean, there's nothing saying that it can't reach around 1800 right now. It's possible that it could turn around. But the daily is still suggesting downside even through the rest of today. And Bitcoin is doing something different. I mean, Bitcoin has now headed down to some of those bigger areas that we talked about to the downside here. So, as I had mentioned, we're getting expansion now on the 15-minute, but we marked this low, higher volume low. We see that we close below it, and then we get expansion down to the next big area. That next big area is this big monthly level at 27.3. So that's going to be the big level. Let me go ahead and poke around the different chats here, see if anybody has any questions, and then my voice is probably pretty shot here. Probably doesn't sound great for you guys to listen to either at this point, but go ahead and poke around the chats. All right, so you guys are wrapping up over there at the shop. All right, cool. You guys take care. I really wish I knew how to get into this stream, my own stream, without just making a complete mess of things here. Let's see. Let's turn off the music and head over to my page. Okay. Let's see if I can hear myself here. Let's turn off the music and head over to my page. Okay. So it is working. All right, let's jump over into YouTube, and then we're probably going to wrap things up here in a moment and see if anybody has any questions. China loves gold, dollar is king. Yeah. Yeah. So, yeah, if you're buying physical silver and some gold, look, I mean, precious metals are good holds. I suggest that if you are into, if you're into trading paper or CFDs on gold, then, you have to be aware of the moment-to-moment moves. But if you're going to hold gold, there's our move to 27.3. Beautiful. We are starting to see a little bit of volume come in on this candle here as well. I will say it's got some room to keep screwing around in this area. It's not like incredible volume. But basically giving up this move from the early part of the move up. There's a bit of a CME gap, I believe, as well. That's likely going to get filled on that. Let's see. Let's drop down to a 5-minute Yeah, there we go. So at least a little bit of volume to pop things back up, and then we'll see where things head. But yeah, what was I going to say? Gold. If you're going to buy it, you should understand. You go to a reputable dealer, and or coin shop if you like. There's plenty of places, but what platforms do I trade on for leverage? What do you mean? For for trading gold, CFDs on gold, long and short, and options. I take options on gold. You can use any broker you want. I work with the guys over at a prop shop that allow me access to things that you probably wouldn't have. So, but for you guys, I would say just use your regular brokers. I mean, most trading platforms for brokers, you can just trade options. I mean, I know Webull is like a really popular one. Fidelity's got some good ones for managing your own stuff. Your own options calls, and puts, and different spreads. You can also just straight up go long and short on this stuff, but just be cognizant of the amount of money you have to have. And you can use leverage, but just be careful. When they margin call you, they will get their money. And I haven't talked to you guys about options yet, but I will. It's something that I really want to do coming into, there's going to be ETFs for Bitcoin, and there's going to be a lot of money to be made on options plays because there's no real good solution for people that want to trade options for Bitcoin. Now you've got OKX, but it's a limited market. And of course I'm in the US, so I could never trade OKX options. That would be silly. And there's a liquidity issue there as well. With the options there are some decentralized options platforms for Bitcoin, but they're not, and that you're not making any money. Even if you hit your strike prices. But I'm going to actually start teaching you guys about options because it's going to be something very important for you to understand. What is the difference between, buying and selling a call or a put? What are the different, options terms mean and how do they work? What are some of the more typical spread plays that, and in some cases you need to have a certain account size to enable certain features for options, mainly because of the way the broker has to classify you as an investor or trader. So just keep that in mind as well. So some of the things I'll be very high level basic stuff with options with you guys at first, and then I'll get into the more complex stuff. Because you need to have a larger account size to even do certain types of options plays, like, a butterfly play or, building out different rollable positions, stuff like that. Like you have to be classified as for investor purposes and stuff like that. You need to be classified as a specific type of trader. And that puts you also need to understand, you should have a tax professional as well, assisting you if you're going to be doing and managing your own portfolio like that with options and through traditional brokers like that. But I think Bitcoin will be a very popular options play to get into. And then once you know options, you get to, understand what it is that you're trading options on. But then you can go ahead and take a look at gold, silver, and other, stocks, bonds. Well, not bonds, but I mean, there is ways to do options on bonds, but it's derivative betting on stuff. It's anyway, not going to get into it right now. But you could totally do leveraging. Let's just put it that way. I mean, you can leverage, your account right from the get-go on most of those platforms. And look at that. We made this chart earlier. I told you below, 27,871. I'm generally looking for a rundown. We did have the higher volume. Marked it. When it broke, I'm looking for this move down. We were up here around that 27,8 something area when it was trying to regain it earlier in the stream when I went over this chart. And you can see how perfectly this just plays out. So we marked, okay, this is a 5-minute, right? But on the 15-minute, we marked this area. And, once it failed there, it took out the low and boom, down. Just so happens that the candle that's marked is the candle that was setting that low. So here's the 15-minute. Boom, down right into that wick area. And I could still give it some room down to 27.2. That monthly is a big area. Cool. So I think I'm going to wrap it here for today. Yeah, this is, by the way, what this technique that I'm teaching you, and I hope to have a dedicated video for this particular technique for volume analysis to evaluate continuation and swing fail patterns. So, I mean, when doing this, you'll find that it is some of the, and you need to make sure, this is the one caveat. You notice that I do this on spot price action because volume across different exchanges, because of their liquidity levels, are going to be very, very different. If I'm going to chart anything, I'm not going to chart the derivatives of that thing for volume. I'm going to chart the actual thing, in this case, spot price, right? I'm not going to chart the derivative values of it in terms of inverse and different exchanges in terms of their contracts for spot, because they are derivatives of spot. So keep that in mind. Now, if there's only derivatives that are offered for your coin of choice that you want to trade, then you're going to want to do this on the biggest exchange for, that, in most cases it's Binance for that coin. But yeah, that's going to be it. And then one last thing we'll finish up with before I go. Open interest looks like it just got wiped out to the downside. If it can hold these highs, 27.2, this is likely to pop right back up. So funding, very positive right now. So still got a little ways to go. It is starting to shift, though, across the board here. But open interest got wiped out. That big tick up over 9 billion, 9.11 bill. is now right back down to where it was. So lots of late longs getting flushed out, still in beautiful higher low territory. So as long as it holds up above that monthly, and then subsequently if it does drop down below there, that weekly 26,750, then looking for further upside. This might be a little bit of a grind. All right, you guys take care. I will talk to you later today in the Bitcoin in 60 seconds video. If you're on YouTube, please go ahead and like and subscribe. Turn on notifications because the shorts videos get buried pretty quick. If you're on X and you're watching this on X, hey, thanks for showing up. Sorry I couldn't chat with you. I don't know how to get into the chat without, for my current setup, without having reverb come through, even when it's muted. I don't know what the problem was earlier. But go ahead and follow me on X if you can. If you're on there, even if you're on YouTube, at CryptoLandy. The link is always in the description as well for the videos here on YouTube. Go ahead and like the videos, turn on notifications because those shorts videos have been getting buried pretty quick. I release them about 7 p.m. To 7:30 Pacific Standard Time. And then I'll repost them, the link to them on Twitter. Your likes and subs and, shares of those videos do very much help. And I appreciate you hanging out with me today. You have a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. I apologize about my voice today again. I will hopefully be feeling a little bit better come next live stream. So take care of yourselves. I will talk to you very soon. With all of that said, Landy out.